Shares of HPE in the red right now, having their worst day, in fact, since May, after the company issued disappointing earnings guidance for 2024 at its analyst meeting. The stock now negative on the year. Joining us here first on CNBC is HPE CEO Antonio Neri. It's great to have you back on.
Thanks.
So what happened here? It was your investor day, and this guidance was put in the release and was very disappointing.
Well, actually, I think the market's still trying to understand that guidance in the context of the fact that we excluded the dividends that we get from our put option in China. So we decided to exercise that put option several quarters ago, and the consensus that was out in the market included that dividend. So when you exclude that, actually, our guidance for non-GAAP diluted earnings per share is actually up 4% year over year.
Do you think it was just an error in the analyst models?
I think is a time for digestion. I think 12 of the 14 analysts still had that number included. Remember, we're going to get $3 billion after tax that we're going to use to apply capital returns to shareholders when the time comes to the collection.
Because, I mean, I don't have to tell you some of the reaction, lower than expected earnings and free cash flow guidance, according to, here, I think Barclays, or one of the analysts are saying, suggests that 2024 growth initiatives are taking longer to materialize. Yes, that was Barclays.
Well, actually, we got it a 2 to 4% growth for 24, 3 to 5% growth over the next 3 years. We will continue to expand gross margins. We're going to see double-digit growth in AI, double-digit growth in the intelligent edge. And at the same time, our free cash flow conversion is improving, because next year we're improving by 10% when you exclude the $200 million from the H3C execution. So it takes a little bit of time to get adjusted to the new narrative, but operationally we are doing what needs to be done and continue to improve the shareholder return, which has been awesome, because in the last 3 years we improved that shareholder return 121%.
So is there any degradation in the macro backdrop? If there is, why not say so?
No, well, we didn't say that. We said that we are adding $100 billion to the total addressable market over the next 3 years. Our intelligent edge business now represents 20% of the company's revenue, almost 50% of the company profit. We expect that market to continue to grow as we expand into the new areas. The hybrid cloud market will continue to grow high single digits. In fact, our annualized revenue run rate is growing over 40%. And then the AI, obviously, is a huge opportunity. And that market alone is going to be $150 billion over the next 3 years. Now, customers are taking a little bit longer to make decisions. But that said, path to revenue takes a little bit longer in AI because of the way revenue gets recognized.
But you don't see it as a repeat of sort of what we went through earlier in the year, elongated sales cycles, more corporate uncertainty, anything like that?
No, the sales cycle is still long. But remember, IT now is a core spend for any enterprise in this market. They got to continue to drive that digital transformation. And we actually reaffirm our guidance for Q4, which is actually a very positive trend for what we have seen.
You've been trying to shift the narrative to an AI provider around enterprise spending. Are you having trouble convincing investors that you're an AI play?
No, remember, we have 3 growth engines in the company. One is the intelligent edge, which is growing at 50% year over year. That we expect that to continue to grow double digits. And that, to us, is core because it's generating the largest profit in the company. Hybrid cloud for us is HPE GreenLake. I want to call it the 4th cloud. And fundamentally, that business now is growing 40% plus. And then we have AI. And AI this year is going to grow very nicely, double digits. We reaffirm double digits going forward. And it's a big opportunity for us because we have a unique platform, which is inclusive of infrastructure, software, and services to run these large AI scale models. In fact, this year alone, in the last 2 quarters, we actually booked almost $3 billion in AI orders that we will see over the next few quarters materialize in revenue.
What do they do? What kind of orders? What are you doing for your customers there?
Basically building these large AI native architectures that includes many types of accelerators, including GPUs, so they can train and retrain and tune this model with their data.